Hello everybody, it's Dave the NV guy over here at Garland Shelton Nissan in Temple, Texas. And today we're going to talk a little bit about financing, and one aspect of it's called a TRAC lease, and whether a TRAC lease is going to be something that benefits your business. I've got a lot of customers that use TRAC leases to obtain vehicles for the business, and we'll go through these, give you some ideas whether this is going to be something beneficial to you or not. I'm going to start out by giving you some of the normal things that people will tell me why they don't think they can or shouldn't lease. Some of it is legitimate, but sometimes it's just a lack of understanding about what a TRAC lease can do for you. First thing people tell me is, I drive too many miles. Well, it doesn't matter how many miles you drive with a TRAC lease. There is no mileage restrictions. You can drive 100, 200, 300,000 miles. It just doesn't matter. Next thing people say is, my drivers, they're too rough on the vehicles. Well, the condition of the vehicle at the end of the lease, the usage and conditions, not a consideration in a TRAC lease. It will have some effect on what the value of the vehicle is, the residual at the end of the lease, but I'll explain and show you how we set that very low anyway. People will say, I want to own my vehicle. Well, do you really own your vehicle? If you bought it and financed it with a bank, you financed it for 4, 5, 6 years, do you really own it until you pay it off at the bank? You really don't. So then besides that, I'm going to show you why the TRAC lease will probably make more sense to you in the long run anyway. Next thing people will tell me is their business doesn't have any credit. Well, this is normal. Nissan Finance works with customers like yourself all the time. What Nissan Finance is going to do is they're going to look at the credit history of the officer of the company who's going to guarantee the lease. And the best part is, Nissan Finance does not report this lease on the guarantor's personal credit report. So you can sign it as personal guarantor. It's not going to show up on your credit report unless, of course, the business doesn't pay, and then they're going to start looking to you for assistance here. This information may seem like it's a little boring, but trust me, it can be very important to your business. So please stay with me here just for a little bit. I'm currently the #1 commercial manager for Nissan in the United States with TRAC leases, so I do have a little experience about what this is. I want to go over what is a TRAC lease. A TRAC lease is a terminal rental agreement clause, and it's a lease used by businesses that use a business vehicle for more than 50% of the use as business use. The risk and rewards of ownership is transferred to the lessee through a TRAC clause. We're going to set up a very low residual. That's the value of what the vehicle is worth at the end of the lease, and that's what you're responsible for. The TRAC lease has typical terms, just like all leases: a cap cost, that's a selling price, less incentives, the fleet incentives, my discounts. Added to that selling price, we're going to put any upfits that you want. The acquisition fee the bank places on the lease, $595. All those are part of the cap cost. And then we have the residual. We're going to set a very low residual on this TRAC lease, and it's something that I'll show you here what that's going to do for you in the long run. And finally, there's the interest, or the cost of money, that is included in the lease payment every month, and that's what the money factor is all about. So there was a gentleman by the name of J. Paul Getty who said, if it appreciates, buy it. If it depreciates, lease it. And so he knew what he was talking about. He's a very wealthy man. The TRAC lease is a financing instrument, just like normal financing, but it's a finance instrument of choice for many businesses when adding vehicles to their company fleets. TRAC lease combines the financial benefits of a lease with the option to purchase the vehicle at the end of the lease term. TRAC lease creates cash flow flexibility and tax incentives for your company. Who should consider a TRAC lease? Well, pretty much every business, whether you've got one vehicle or 100 vehicles that you're adding to your fleet. You could be a sole proprietor, a partnership, a corporation, trust, a nonprofit, or limited liability, an LLC. Any of these businesses should consider a TRAC lease. It could be very beneficial to you in the long run. Some of the benefits a TRAC leasing, no mileage restrictions, no wear and tear or usage charges. The customer pays only for the use of the vehicle during the economic life of the vehicle. Typically have lower payments than what an equivalent conventional lease or loan would be. Usually there's no down payment. Sometimes you put down tax and license. There's no security deposits. And you can get single billing statements for all lease vehicles. I've got one customer, he's got 40 vehicles that we've done TRAC leases, so he gets one statement from Nissan Finance to cover all those instead of individual statements for each one. Some of the questions that I get from people as to whether this is a valuable tool for them. Some of the questions that I get are, who sets the residual amount? Well, the residual is going to be something that we're going to discuss and talk about, because we can set that residual pretty much anywhere we need it to be. And again, we're going to make it a very low residual value. We're going to take a vehicle that normally would be, say, a $20,000 selling price, and normal residual on a lease might be 50%. Well, we're going to set that residual at maybe 20% or 25%. We're going to set it at a very low amount, because at the end of the lease, you're responsible to buy the vehicle for that residual amount. If you don't want to buy it, what we're going to do is we're going to turn it back into us. We're going to send it to the auction. That's going to get sold at the auction. Now, let's just use this as an example, okay? So your residual was set up to be $4,000 on the vehicle, and it comes back and you've driven it 200,000 miles. We take it and send it to the auction, and it gets sells for $5,000 at the auction. Well, you're going to get $1,000 back to you. After we settle up with the auction and everything, you're going to get a check sent from Nissan to you for that $1,000. And let's say it brings $3,000 at the auction because the condition was that rough and so many miles. If it brought $3,000 and you had a $4,000 residual, Nissan Finance is going to bill you for that extra $1,000. But we set the residual very low. What about including the upfit or conversion that you need done? Well, like I said, we can include that in that cap cost. We can include the cost of the upfit, in most cases all of it, so you don't have anything out of pocket to cover the upfit of the things you want to add to the vehicle. We can even include things like maintenance agreements. Question sometimes comes up, I might need more units now, might need more now and during the next year, so do I have to reapply each time? One of the things that I'm going to do for you is I can set you up with a line of credit with Nissan Finance. Set up $500,000, $1 million line of credit, whatever we need and whatever you qualify for, we can get it set up. So as you need vehicles, we don't have to reapply each time. We've got it set up. All we have to do is just send the contract in to Nissan for funding, and it saves a lot of time and aggravation on both your part and time on my part too. So we can take care of that for you. What kind of terms can I get on a TRAC lease? TRAC leases can be short. We can do 2-year leases, 24 months. We can do 4 or 5-year leases. We can even do longer, but most TRAC leases are going to be 36 or 48 months. Just 63 months sometimes, just so that we can keep it a very affordable lease for you. Tax advantages. Well, there's quite a few tax advantages. TRAC leases are commonly considered off-balance sheet financing. The lease generally is treated as a 100% tax deductible operating expense, not a capital acquisition. Of course, consult your tax advisor for more information on this. I'm not a tax advisor. Another thing that you want to consider is the Section 179 tax code that can benefit you this year. You can take and do this lease, and the full purchase price of the vehicle, if you had a profitable year, you can deduct that full purchase price off this year's taxes. So you need to look into the Section 179 tax advantages there. Can I do a TRAC lease with nothing down? Yes, typically a TRAC lease is going to be something that we're going to set up with a low down payment or no down payment. You always pay your first monthly payment up front. Sometimes you might want to include tax and license down payment, but we really don't have to include anything. You just pay your first payment up front and that's it. So this is just kind of a quick snapshot of what a track lease is. If you need more information about it, best thing to do is give me a call. You can give me a call at 254-742-4149 or drop me an email, dave@thenvguy.com. There's also going to be a posting on the nvguy.com website about track leasing. But take and consider it. It's something that's going to be able to give you flexibility in getting a lower monthly payment for the vehicle with little or nothing out of pocket down, and could be some considerable tax savings for you. So track lease is a very valuable thing for a lot of businesses. Hope this has helped answer some of the questions. It's certainly not everything about track lease, but please just give me a call. Let's talk about it and see how this can help you. Again, it's Dave the NV Guy over here at Garland Shelton Nissan. Have a great day. Thank you.